So how much money can I borrow? It's a question we all ask ourselves from time to time. And it's a good question to ask. And from a lender's point of view, it's a question around serviceability. So when they're talking about serviceability, they're actually saying, here's the household income coming in, here's the expenditure that we've got associated with running our household, and then finally, what's the surplus cash that's left over? It's that surplus cash that's going to correlate to the repayments that we need to make to service that debt. So if you're a first home buyer, one of the things you need to take out is obviously your rental expense. So if you're paying rent, take that out to do your calculations. Now, if you're also looking to buy for investment purposes, make sure you add in the expected rental income, that's the net rental income you're going to get, but also factor in the expenditures and the cost of holding that particular investment property as well. And then you wash out the actual surplus at the end, and do you have enough money to cover that? Now, that's all you need to understand. A great rule of thumb for you, however, and this is a great little tip, every $25,000 that you have coming in household income roughly correlates to about $100,000 in borrowing power. So you can do some rough numbers. Now, if you look at the internet, there's plenty of calculators out there that will show you roughly what you can borrow. But bear in mind, some of you may be a little bit shocked in terms of how much the banks are willing to lend you. And don't overestimate that figure. They're obviously trying to engage you into a conversation, but the reality might be that you can't borrow as much as what they're showing on there. And the reasons for that might be simple. You may have 2 kids or 3 kids, but the assessment calculator is only factoring in that you don't have any children at all. So they're the types of things you need to understand, and that's how you work out how much you can borrow.